Let's turn now to PepsiCo, find out what's happening in the world economy and consumers. The company topped estimates thanks in large part to international sales growth, though global volumes fell in the quarter. PepsiCo Chairman and CEO Ramon Laguarta joins us now to discuss the quarter. It's good to have you back, Ramon. Welcome.
Hello, Sarah. Good to see you.
So it's good to see you. There was some improvement that I wanted to mention in the beverage business and certainly in international. What's driving that?
Yeah, international continues to be a very resilient business for us. It was a bit of a summer blip with weather in some markets, but we've seen September coming back and it's very strong. Beverage business in North America, strong as well, continuous acceleration. Pepsi brand trademark, overall trademark, gaining volume, gaining net revenue, gaining share. Good in the functional hydration, both Gatorade and Propel. And we also saw a sequential improvement in our food business in North America, which is a big part of our business, obviously, and the one that has been more challenged in the last few quarters. So we feel good about the future. We're seeing an improvement towards Q4. We're seeing very strong pipeline of innovation we're coming up with. We're seeing our big brands also being restaged, the Lay's, Tostitos, Gatorade, so big brands that will make big changes. So feeling positive about the acceleration of the top line and the cost restrictions that we're taking with a sense of urgency to improve our margins as well.
So I wanted to ask about snacks because that has been the tough part of it and what investors are concerned about. You said recently in the last few weeks things have turned up. So what is the plan there to get back to your long-term growth targets on snacks?
I think, Sarah, a couple of things. First, I mentioned this morning being brilliant at the basics, executing at perfection, customer service levels, the right price point, the right execution. We're seeing improvement. We had some blips at the beginning of the year with SAP rollout. Now that is behind us. We're seeing customers leaning into our giving us more space, giving us more support as we provide the right services. It's very strong innovation strategy, and you will see the relaunch of the restage of Lay's and Tostitos, talking more about the food in the brands, the best potato chips fresh from the farm, the Articraft way we make the masa for Tostitos. Those are, I think, ways to connect with consumers in a much better way. And then innovation, we have innovation in protein with Doritos Protein and Quaker Protein and some other brands with protein as well. We're launching a Naked, which is a brand without colors, not natural or artificial, without colors. The best Doritos, the best Cheetos without colors. We're very encouraged with the customer reaction, consumer reaction. So we're actually a combination of brand, combination of pricing, execution, a combination of new platforms for innovation. We're very optimistic that the Frito business will be flat or growing, towards the beginning of next year, which is a big progress versus what we were.
I really wonder what color Naked Doritos are. It's hard to imagine.
Naked Doritos are, the same, your favorite
brown?
Doritos with no colors. The color of food, Sarah, I mean, this is what it is, the color of food. So we'll see if we can take consumers with us in, disconnecting flavor with colors. And that is a big question that we want to test. And hopefully we can convince them that it's the same great taste, but with no artificials, no colors at all.
I think that investors were encouraged by the new CFO announcement that you had today, especially coming from Walmart, which is obviously known on the street as a very good operator and having an open mind around taking in an outsider. They like the sense of urgency. I mean, clearly you have Elliott management in the stock. What are your engagements with them like, and what do they want?
Yeah, so listen, on Steve, we're very excited to get Steve into our team. Obviously, I've spent the last 9 months trying to find as Jamie was retiring or expressed his willingness to retire, to have a new CFO. It is hard to find the right person. I think with Steve, we have the right experience, the right proof points of performance, and the right culture fit with PepsiCo. I'm very excited that he will be a great partner to drive PepsiCo 2030 strategy. Now on Elliott, constructive conversation so far. We've had a couple of interactions with the Elliott management. I think we're aligned on a big idea, which is PepsiCo is undervalued, and we both believe that with the right actions, this company will go back to the multiples and the valuation that it deserves. And we're acting with urgency, both on portfolio and on cost transformation. The majority of the ideas that Elliott is proposing, we have it in our PepsiCo 2030 strategy, and we're executing. So, that is something positive. There's a couple of ideas that we're going to have more, I think, mutual education as we, in the coming weeks and months. And I'm sure we'll find a way. We're open to any ideas. We appreciate any perspectives to incorporate into our strategy and make PepsiCo a great performing company, best in class in our sector. And that's what we all want, and create shareholder value. So positive so far, more interactions to come, and I'm sure we will find a way to create value for PepsiCo.
Yeah, I'm curious then what that might be, Ramon. It's David Faber. I mean, they put out, as they often do, a long report, of course, in all the ways that Elliott views your ability to create value. One thing that I think caught some investors' eyes was their contention that since acquiring your bottlers, that is PepsiCo acquiring bottlers in 2009, 2010, your North American beverage business has, they say, profoundly underperformed the Coca-Cola system and Keurig Dr. Pepper on growth and margins. Is that true? And does that put at the center of anything you might do the idea perhaps of divesting those bottlers?
David, we'll be open to any ideas. I think the portfolio is critical to our performance and long term, making sure that our portfolio is in trend with consumer, and I think that is our focus. When it comes to the supply go-to-market, which is where the refranchise comes into play, we will be open. I think the solution for the U.S. is not one solution for the whole country. It's a very nuanced solution. In some areas of the country, we'll leverage more our snacks business. Scale matters where we're small in beverages. In some other parts of the country, other solutions might be more relevant, including maybe some refranchising some territories. We're talking. We are open-minded. As I think about the future of demand, the possibilities of technology, and optimizing PepsiCo in its totality, not only beverages or snacks, I think there will be multiple solutions, and we'll continue the dialogue with the Elliott management and see what is the best. The same as with the other investors, not only with Elliott, obviously.